Good day, traders. The 4-step method to high performance trading is a free course download for increasing your competence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about day 2. We're going to be going through the templates and looking at Tuesday, day 2, and identifying whether or not we can find a day 3 opportunity and what else we can look for on a day 2, which is typically the day that gets traders chopped up on. And I've talked about day 1, day 2, day 3, looking for parabolic opportunities on Free Cash Wednesday, day 3, or Free Cash Friday, day 3, for parabolic trend trades or parabolic reversals. And I've placed these last three videos, which I have endeavored to try and go to detail in terms of timings, the levels, and the behavior of price, day 1, day 2, day 3, to identify the highest probability / possibility opportunities on the day for a 90-10 best trade candidate. And today we're going to be looking specifically at the different pairs. We're going to look at the day count on a Tuesday, day 2, in the Monday, Tuesday, Wednesday template, and the Wednesday, Thursday, Friday template. And when we can't see a larger template thesis just yet because we're on the front side and we're on day 2, then we go to our day count, our 3 days of opportunity to hopefully identify the best candidates on the day. So again, in the playlist, these last three videos pretty much go through each aspect in terms of the larger templates, the levels, high of day, low of day, closing price, and then understanding the 3-day template opportunities. And the thesis again is targeting opportunities where we are about to have an explosive movement. So not trying to get a direction right. I'm looking for rinse and repeat scalable opportunities. Let's get started. Now, I'm trading the U.S. session, and we'll talk about front side, back side opportunities in the Asian session as well, and how we can look for those in Asian crosses. So just looking at the Japanese yen, today is Tuesday, pink line separating our Friday, Monday boundary. And if we're looking for an opportunity on a Monday or Tuesday, we're always trying to find an instrument perhaps that is maybe in a day 3, or when I come to the US session, which is defined by the yellow boundary line. This is a 1-hour chart. Same process we talked about in the previous videos is that I'm looking for evidence of where other time frame traders are in the market. So again, I'm not paying attention to what I consider to be the matrix inside. I want to know when we come to Monday, beginning of a new week, we have our high of the week in place, and you'll notice that Friday was an inside day. And then we have Monday, the low of Friday's boundary is broken on Monday. Now when I come to the screen on Tuesday morning, my time in the US session, this large wick is pretty much Bank of Japan intervention. I'm sure there was no news release or anything that came out, but we have obviously a lot of volatility, but this is almost a red flag for me. But we have day 1 shorts in the market, the break of the inside bar. We don't have a first green day, but we do now potentially have a thesis if traders were going to look at trading this as a large wick that may give an opportunity off of a level. Heading into our U.S. window, we had U.S. major red news at 8:30. After our major red news release, we're already at the high of the day, the high of the week, and this is a no best trade candidate for me. Again, large wick, volatility. We don't have a range established yet. We go back to our hourly chart. We're inside the high and the low. So again, ruling out on a day 2. We are trying to filter opportunities that give us a day 3 parabolic, and this large wick on our 1-hour time frame has obviously spiked down, but we're also being now forced to buy high, and there is no best trade candidate on this pair. If we look at our US Swiss, we have a high of the week made on Thursday, an inside day on Friday, and then we have day 1 shorts triggered at the open of the day and the close of the day on Monday. Today we have closing price level as a potential area coming into our New York window. We had major red news at 8:30 a.m. New York time. So we have a day 3, Thursday being the high of the week, Friday an inside day, Monday lower lows, lower highs, and a high of the day at Friday's closing price level. So remember, we're on Tuesday, day 2 of the new week. We're pushing up into Friday's closing price level. The news takes us up into the high of the day before breaking down into the New York Open, pumping up, and an engulfment underneath the closing price level into the beginning of the third hour. So coming back to behavior of price and timings. We have New York Open. We have our levels, which is Friday's closing price, high of the day. We have our low of the day, low of the week, and closing price from Monday as potential target, the low of the day. Not suggesting that, again, understanding we can filter out the best instruments, meaning that our risk reward here is roughly 25 pips. We have an opportunity for just a continuation move back to the low of the day, low of the week, beginning of third hour. So coming back to understanding hourly rotations. We have our high of the day. They pump it back up into the high of the day after the news. That locks in our high. Go back and watch the video on gold. First hour puts a high and a low. They pump it back up into the high. Third hour begins for the collapse for 25 pips back down to the low of the day. Timings, levels, behavior of price. Day 3 opportunity on Tuesday on the Swiss franc for low-hanging fruit. Just a session scalp and nail and bail. And that's it. We're going to look at the euro in a moment, but I wanted to show the British pound first. Several traders told me they traded the pound today. So coming to our day count, Friday is the closing range of the week, and I'll encourage you to go back and study that opening range, closing range of the week. That's our high and low heading into Monday. We have shorts in the market. We have an inside day on Monday. Traders were trading this today, and we're inside. We're inside of Friday's range still, and we're inside of Monday's high and low. We do not have a day count broken at the high of the day to consider this a day 1. We just have 3 days in the trading range. So again, understanding that, as I mentioned, your odds of success increase when you're able to identify a day count and go to one of the levels, high of day, low of day. But if we go to a smaller time frame, you'll notice this is our first hour. Our second hour is the small bull candle. We'll zoom in on this for traders to see. I'll just bring this down. The smaller bull candle is the close of the middle hour after the New York Open. So closing price from Monday acts as a level of support. So there's 3 levels that I'm looking for opportunities from. High of day, low of day, and closing price level. The importance of closing price and understanding if your entry is the previous day's close. This is the beginning of the third hour. We'll just zoom in on this again. Beginning of the third hour, so hourly rotations, 1 hour down. Second hour inside New York Open, 1 push, 2 push, and then 1, 2, 3 down. But the timing of this, major round numbers, 50, 2 double zeros up through the high of the session, dump and pump, back up to the high of the day. Closing price to high of the day, 50 pips for traders who took this opportunity. So we did not break a high or low of the day boundary. We broke the closing price level before finding support there, coiling sideways. We can put our universal EMA on this chart, and it confirms our opportunity for the reversal on the British pound. We're on the euro, and just remember, we're trying to target and find day 3, the best day 3 opportunity on a Tuesday, day 2. We have day 1 on Friday. Remember, Friday is the closing range of the week. We talked about this last week. We don't start the day count unless a daily boundary is broken on the other side. That happened on Monday, which makes Friday our day 1 and Monday our day 2, which means that on Tuesday we're potentially now in a day 3 situation. We have an engulfment in the London session that potentially may act as a low of the day boundary. Now, how do we know this? Traders ask all the time, how do you know the low or the high of the day is locked in? It has to do with timings and the behavior of price on the day itself. So if you have a day count that we potentially now can say is a day 3 opportunity, if day 3 is our opportunity, again, remind yourself there are two types of opportunities we're going to look for on a day 3. A parabolic trend trade, which means we have peak formation low, peak formation high, consolidation, trend continuation on day 3. If we go to our smaller time frame, we dump down before the session starts. We have major red news. Second hour trades back into the W engulfment formation made in the first hour. Remember, timings, levels, behavior of price. New York opens. We're at the low of the session, trading down into our peak formation low. Our third hour opens, engulfs inside of our universal EMA for the reversal coil back through the high of the session, high of the day on a day 3 trend continuation parabolic long opportunity on the euro. When we look at gold, I did not see any opportunities that jumped out at me today because we are inside from yesterday and today inside of Friday's large range day. We have Monday is our day 1 in a new week. We did not break any boundaries until the New York session began, and we'll just zoom in on a smaller time frame. So we have an inside day. Thesis could be for traders that we could get a reversal at the high of the week, the high of the inside day, trading underneath of Friday's closing price. So go back and watch the video again on timings, levels, behavior, price, the 3-day count, because we talked about high and low of the week and the closing price of Friday. If traders were to have taken this trade in the third hour, 20 minutes into the third hour, 25 minutes into the third hour, we had our engulfment after the spike up onto the high of the week and high of the day, New York Open, and then the retest and engulfment above the high of day level. A high of day level, a 1-bar stop, and that market eventually dropped 50 plus pips down to the low of the session. So again, I'm just reinforcing the importance of the levels and the timings. Traders are trading inside, and especially on a day 2, and getting chopped up or caught into a poor quality opportunity. Not to suggest that every reversal is going to be a best trade candidate, but it's about filtering the opportunities and not getting caught into chasing movement. We talk about the Fugazi, and New York opens and goes to the high of the week, the high of the day, retests that and engulfs into our third hour. So New York blows off into the peak formation before engulfing and reversing for a 50 pip plus drop, depending on where traders exited this trade on gold. The next chart we're looking at is West Texas oil, and we had a large range day that reversed from Thursday into Friday, but we're inside on Monday. It's an inside day. And Tuesday broke Monday's low. First thing is, right off the bat, I'm not even interested in this pair because it's inside of Friday's range. I know there are traders that traded this today. I'm just telling you what I personally was not interested in. We had closing price and the low of the day as the levels. The market traded down lower in the beginning of the Asian session. That forms our new low of the day for a potential target for traders who timings, levels, behavior, price shorted that off the closing price level in the New York session. But going back, study your templates. If you choose to trade inside, understand that you're inside of a larger range high and low of the week. And so when I look at this, it's the odds of success are lower than if I can identify a day 3 candidate. Now we're day 3 from the high of Friday. We had an inside day. Traders' thesis may have been to buy the low of the inside day on a false break. It retests that higher high, and when it got to the low of the day later in the session, traders were looking for that long reversal, potentially now targeting the high of the inside day and maybe the high of the week. We have first green day on West Texas. So another example, as I repeat to traders, they're looking for first green day, first red day on Monday, and we essentially haven't even started the week. So we have a high of the week on Friday. Friday's the closing range of the week. Inside day, day 1, day 2, day 3, first green day now, which our closing price assumably will be up here. First green day, we may have an opportunity on West Texas that develops tomorrow on Wednesday, parabolic Wednesday, or even later in the week for a reversal opportunity. But we have first green day now on a day 3 count that was inside, essentially a double inside day. This large drop down, the gap, is what Al Brooks would call a bear engulfment candle. So we have our day 1, day 2, inside day, day 3, maybe shorts trapped on the inside day, and a first green day on West Texas. We're looking at the DJ30, and I just want to talk about the indexes for a second here. We had a breakout on Thursday of a daily low, an inside day on Friday, and then a higher high on Monday, which broke the high of the day, which starts our day count now, day 1, day 2, day 3 on Monday. Now, we did not break any daily levels prior to or at the New York Open until later, and I'm going to just establish something first as to why I traded the NASDAQ. We'll come back to this in a moment with the S&P, but again, the day count, day 1, inside day Friday, day 3 blowing off in the direction of that reversal, inside day. We have inside day traders in the market. We'll point this out. The U.S. session, New York session, the low of the New York session from Monday is right here. The low of the session, the New York session. Now, this timing coincides with the NASDAQ touching the low of the day. I want to just kind of visit this concept for traders to understand. I talk about the Fugazi, they're trading Asia and London and all these things, and it's a U.S. index. And so when I'm trading the U.S. index, 9:30 to me is when everything happens. And you'll notice today, all we did was drop down to the low of the U.S. session on day 2 before engulfing, an explosive engulfment right at the New York Open, and the third hour parabolic continuation at the closing price level. That next hour went vertical before blowing off and reversing at the high of the day, the high of the week on day 2, Tuesday, day 2. But I just want to paint the picture of understanding the true high and low of the New York session and the timings of when all this occurred. Now, on the NASDAQ, we actually went to the low of the day, the closing price of Friday, and the low of the week, which broke a level. The S&P behaved similar to this pair. It did not go to a daily level, but it went to the low of the session. Now, if we just zoom in on this, we are talking timings, levels, behavior of price if you were to trade this. So the large engulfment gets traders chasing that, but understand now we may have a low of the day in place, locked in. People say, well, how do you know it's locked in? The timing of when it occurred and the behavior of price. We're on day 2. We have traders reversing off that level and then trading down into it in our timing window, our 3-hour window, before it continues to auction higher. Pin hammer at the high of the session, the high of the day, and a 4th hour parabolic move, and the reversal later in the day. Timings, levels, behavior of price. Now we're looking at the NASDAQ, and I'm just going to keep repeating this. Closing price, Friday's the closing range of the week. It forms the low of the week, the low of the session, the low of the day. Heading into our new week. And so, as I'll reinforce, pay attention to the closing range of the week. Friday's important. Monday's the new day, new timing cycle in a new week, which we saw the explosive reversal occur in the New York session off of the closing price of the week on Friday for a vertical explosive move. That was an inside day. Keep repeating, focus on levels. Don't focus on little bars and zigzags and everything else. The timings, the levels, and the behavior of price when they get there. So heading into today's New York session, the market was already collapsing. Now, I want to just repeat this. If New York's not even open yet, is the price action inside really happening, or is that being created for you to chase? Think about that. I call it the Fugazi. People are still chasing stuff in the inside. They believe that it's, maybe there are opportunities there, but when you're going into the beginning of the session, we had major red news. As one trader asked, well, how did you know it wasn't going to go lower? Timings, levels, the behavior of price. New York blows off into the closing price of Friday, low of the day from Monday, the closing price from Friday, and the low of the week. Now, if we zoom in on our smaller time frame, we have a new hour, and we're at those 3 levels right there. Closing price, low of day, low of week. We have our new hour starting on this little bull candle on a 3-bar reversal. We can go to the 1 minute, we can show that, but I just will keep saying the same thing. Timings, levels, the behavior of price. If the market dumps down before a session begins, think pump. It's day 2, we're at the low of the week, and this is exactly what we should see on a day 3 from Friday's closing range. Go back and study Monday to Wednesday, Wednesday to Friday. Monday's the opening range, Friday's the closing range. Timings, levels, the behavior of price. I'm not worried about all this stuff. If I feel like I got to chase it, remember, if you're chasing it, you're the order flow. You're missing out. You're getting in. You can't stand it any longer. And then boom, level to level. Closing price from Friday to closing price from Monday. Low of the day from Monday, closing price from Monday. Low of the week from Friday, closing price of Monday. Levels, timings, behavior of price. This is an excellent example of front side, back side. So we had a large run up last week. First red day on Friday, and then a breakdown of shorts into the market on Monday, our opening range for the week. That made Friday day 1. Once this level is broken, repeat again. We have Friday, Monday. Once those 2 levels are broken, we can now start our day count, day 1, day 2, which means that potentially we have a day 3 opportunity on the backside heading into our Asian window. So pay attention, just look at the chart, ignore the candles for one moment, and just again identify the levels. Market breaks down off the closing price of Friday's closing price of the week. Our closing range of the week, we have shorts in the market breaking the closing low range of the week, day 1, pumping up into our closing price of Friday, heading into Tuesday, which is day 3, day 1, day 2, day 3, Friday high of the week, Monday day 2, Tuesday becomes our day 3 in that cycle. This is a day 3 parabolic move. We had Aussie dollar rate statement news release at 8:30 p.m. New York time. Monetary policy meeting in minutes. If traders were out of the market, they still could enter in after the major red news and still had the opportunity for 50 pips. This is a 5-minute chart, so even on a smaller time frame, we're just continuing the move. No wicks, as we talk about, no wicks, no explosive movement. We already have our larger time frame thesis in place. The trade capitulates after the news release. This is the news release candle itself. But the market continued to auction lower if traders were trading in line with that news momentum catalyst in the London session. Another easy 50 pips. So the opportunities are everywhere, but mastering the day count is critical. And it's important on a day 2 to try and find day 3 opportunities because they are everywhere. Just closing on the S&P, you can go back through all your charts, try and identify day 3 opportunities. Again, an example of where the market at the New York Open 30 minutes to the low of the previous New York session on Monday. We get to our 3rd hour as we reach that low of the session for an explosive reversal opportunity. It's a 5-minute chart. Dump and pump template. A dump and pump template. Low of the day from the U.S. market. Low of the day from the U.S. market. We have our New York Open blowing off down into that level before an explosive reversal. Notice again, even if you're using the closing price as the high of the day, lower highs, lower lows, low of the session, dumping down before the New York Open, they take traders into that low. This was a major level of buying yesterday. The thesis is that this may also show positive buying again today. 3rd hour opens and explodes. We can zoom in on the smaller time frame. Timings, levels, behavior of price. So you have to step back and you have to be patient. We're on a day 2 where inside of our universal EMA is a worst case fill. Some traders would have been more aggressive down at this level. 1 push, 2 push, 3 push, 3rd hour opportunity, bang, explosive movement back through the high of the day to the previous day's high. So this is a fantastic opportunity showing traders that even on a day 2 you can find tremendous opportunities if you're patient and you work from the levels. Stay disciplined. Keep it simple. High of day, low of day, closing price. Timing window, New York Open, no major red news. Look for day 3 opportunities. You can find them on any day if you have a basket of instruments that reflect the opportunities and you understand the day count. Look at the other videos, traders. Study those 3 videos. It's very detailed in terms of timings and levels and the behavior. And these markets are going to do the same thing over and over again. Have a great day, and may the markets go with you.